Mark Zandi says bad things will happen to the economy pretty fast if lawmakers don't settle the fiscal cliff issue. He's chief economist of Moody's Analytics. So, Mark, falling off the fiscal cliff means bad things. How bad?
It could be quite bad, Susie. I don't think it's cataclysmic if we get into January and we haven't settled this, but if policymakers haven't nailed this down by early February, I think stock investors, bond investors will start to get very, very nervous, start selling. We see businesses pull back, and by the end of February, when we start approaching the ceiling for the debt limit, I think we'd be back in recession, and it would be a fairly severe recession. So policymakers have a few weeks, but not much more than that. They have to get this together.
You know, some people are saying that today's jobs report was very encouraging, and that you could look at this as a way that maybe the economy can handle some tough belt tightening because things are looking a little bit better. How do you think the various parties, Republican and Democrats, will handle this jobs report in their fiscal cliff negotiations?
Well, you know, you're right. Some folks look at this and say the economy's strong enough, it should be able to digest big tax increases, spending cuts. Others look at it and say, look, you know, we still have a very high unemployment rate, a long way to go to get back to full employment. The economy can't tolerate big tax increases and spending cuts. You know, like most political debates, the reality is in between. We do need to address our fiscal problems, so we do need to go through some spending cuts, and we also need some tax revenue increases. But we have to phase it in over time, otherwise the economy will choke on that. We can't have too much restraint too quickly. So we have to phase this in, smooth it in to make it palatable for the economy.
But until that happens, there is a lot of anxiety in the labor market. The big fear for many individuals and for investors is that companies are going to start laying off workers. And we saw this week that Citigroup announced 11,000 job cuts. Is this the beginning of a trend, Mark?
No, you know, Susie, I don't think so. I think if Washington can reasonably address the fiscal issues, and I'm still confident that they will ultimately get it together. There'll be a fair amount of brinkmanship, but at the end of the day, they'll get it together. But if they're able to do that, and we get into next spring, I do think we're going to be in much better shape. That businesses are going to get their groove back. Certainly, investors are going to be very happy about that. And by this time next year, I think we should see a much better job market because the housing market, which is already starting to turn, should be in full swing. So, no, I don't think businesses are going to pull back. The only reason they would is if Washington completely botches this. And at this point, I don't think that's going to happen.
So how do you think the Federal Reserve is going to read and factor in today's jobs report? They're meeting on Tuesday, as you know. Do you think it's going to trigger any new response from the Fed?
Well, as you know, the Fed's on high alert. They've got their foot to the accelerator. They're now using open-ended quantitative easing, buying long-term bonds. And they're going to up the ante, I think, at the next meeting in the coming week. Operation Twist ends, and they're going to start rolling that into this quantitative easing process. So a lot of bond purchases. And I think they're going to continue to do that until unemployment is moving definitively lower and is much lower than it is today. And most importantly, they're going to wait to see how these things go in Washington. They're very nervous that policymakers aren't going to get this right. So as long as Washington's dithering, I think the Fed's going to be on high alert. Absolutely.
The Fed Chairman Ben Bernanke has been talking about this for a while now. Thanks a lot, Mark. Great talking with you. We've been speaking with Mark Zandi of Moody's Analytics.